Okay, we are now in Singapore at the Botanic Garden. So I wanted to give an update on the gold forecaster index, but there's not a lot of Wi-Fi here, so I'm just going to do an improvised gold forecaster index here in Singapore. So in the last video I told everyone that you should buy gold on dips, and gold has been moving up a little bit, maybe 5%. Yesterday, however, we saw a huge drop of 2% in gold, back below the 1500 level, and that's happening on rising bond yields. So I think these rising yields are happening because of the economy improving, and also because of debt. We have now crossed the 23 trillion in US debt, and that's also why bond yields are rising, because they need to get into the bond market to get this debt. Also, another reason why the yields are rising is because of QE. Every time when we have quantitative easing, bond yields will go up. And now we have the ECB printing money of 20 billion per month, and which starts in November, so this month. And the Federal Reserve will also print money, but they will print it even more. They will start with 60 billion per month for 4 months. So if you're betting which will go up first, the euro or the US dollar, then it's probably the euro. Euro will be better than the US dollar, because the Federal Reserve will print more money than the ECB in the coming first 4 months. It's very nice here in the Botanic Garden here. Okay, what do we have more to say? Capacity utilization was not rising, so there's not a lot of inflation coming. The producer price index was also stable. What's very interesting is that the leading indicators for the economy are actually going up now. So it's not declining anymore. So the economy is actually doing well because of QE. And speaking of QE, when we look at the repo market, that's where the action is. You see that repo problems are not done yet, because the Fed has repurchase agreements, and they have hit a new high last week. So these things are still ongoing, and the Fed is still increasing its balance sheet. And that will be good for stocks, good for banks, and also good for precious metals. And the worst thing that you should not buy, that is bonds and cash. So that's what we are now looking at. We're also going into a seasonally good period for gold. November, December and January are usually months where the gold price will go up. And so if you see an opportunity to buy gold on dips, please buy it, because the gold forecaster index, when you look at the chart on the website of Correlation Economics, you can see that the gold forecaster index has hit a new high for the decade. So it has never been this high since 10 years. So this is really a buying opportunity to get into gold and gold mining stocks. So this is a very short update here in Singapore, and I'll see you in the next video.